Welcome, boys and girls, ladies and gentlemen. Welcome. Today's topic is about Nigerian debt, where we see Kenyans protesting, especially the youth all over the world, rejecting International Monetary Fund financial bill in Kenya, right? And we started to see the protest in Nigeria. The youth are starting to gear up and rise up and speak against corruption, bad governance, right? Taking debt which amounts to trillions of naira, and still majority of the population, they still live in poverty, abject poverty, so to speak. Now, I have a few lists that I want to share with you today. Okay, Nigeria took $2.5 billion from World Bank, and you know World Bank is the thing. The difference between World Bank, right, and IMF or International Monetary Fund is simply this. IMF, International Monetary Fund, they give small loans. They give small loans or short-term loans, so to speak. They give short-term loans to countries. So in some economic bailout, in economic recovery, and they in terms of programs where countries have to review, like for Kenya it's like 6 months. Every single 6 months, IMF review the condition that it gives to Kenya, right? At the same time, you have what is called stabilization loan, where Nigeria was looking to get from IMF $30 billion. Yes, billion with a B. Okay, now they took this loan. The term the IMF and World Bank use from all over the world is simply this. They say economic recovery, economic growth, economic stabilization. This is for stabilization of the country, right? But the condition they have is so crazy, right? The condition they have is literally so crazy. And one of the conditions that I see from time and time again is one thing: fuel subsidy. The government to start paying for people's oil. The government stop to cut budgets, right? To cut budget, to cut public spending, right? To put government entities, government assets that are not doing well, to privatize them, right? So to speak, you can put them in a stock market exchange, whereby the companies like BlackRock and Vanguard and State Street, right, and the Wall Street, so to speak, they can gear up and buy huge shares of these companies, especially public companies, right? In a case whereby we see Zelensky, where President Trump called him a salesman, a great, very salesman. Every time he opens his mouth, he does one thing and one thing only. He comes from America and he opens his mouth. What happened is he walks away with billions of dollars, right? Signed, given by the President Joe Biden, okay? And one of the prerequisites, right, the requirement of the loans is, hey, we need your agricultural land. Number two, we need the state companies. We need those public companies. We need them. So that when you guys won the war, or when you lose the war, listen, we have what we already wanted, which is the land. Now let's go back to Nigeria. Nigeria took this loan of $2.5 billion. Billion dollars in a time whereby the IMF, the World Bank says this is for economic growth. Now listen, pay attention. This loan is a 10-year period at 1% interest. Okay, at 1% interest. 10-year grace period and 1% interest. And the duration of this loan, maturity of this loan, is 40 years. Some of the things the president do, because they know, like for 40 years from now, probably they won't be alive. They won't be even there. They're not guaranteed if they even see Monday, okay? But one of the things they do, they listen, you cannot borrow from the poor. But what you can do, you can borrow from the poor son. You can borrow from the poor children. And that's what these governments sometimes do. They borrow and they put the burden in the future generation. 40 years, President Tinubu won't be alive. the president of Nigeria won't be alive. And he took this loan, right? Right? This is a very good sense of IMF economic hitman in Nigeria. What essentially also we see that happening in Kenya, whereby we see the government literally took all this debt, and they forced the citizens to pay, right? They made sure, they made sure that they created what is called planned poverty. And planned poverty is whereby you have 60% or 63% of the entire population live in poverty intentionally. What you do, number two, is you do what we call, you make sure that unemployment rises to high that it's never been before. Two things, unemployment and poverty, so that you can be the answer during the next time election. Okay, you say, hey, listen, you see you don't have jobs. If you elect me, I will give you jobs. Listen, you see this price of unga, you see this price of flour, you see this price of cement, you see this cost of living. If you elect me, I'll bring this cost of living down for you. Planned poverty. Now let's go back to IMF and Nigeria. And man, this is crazy. $2.5 billion in a 10-year grace period, and 40% year duration, and 40 year duration. But 1% interest, only 1% interest. So the total loan for Nigeria, I believe, is around 113 billion debt obligation. That's close to like 87 trillion naira. Man, that's a lot of cash at 1% interest and a 40-year payment plan, and a 10-year grace period. So when you do the math, the naira is falling against the dollar. The naira is falling by leaps and bounds. The naira is falling like chump change. It's falling down massive, crazy. And companies are starting to live in Nigeria. Companies like Shell, they're like, yo, the cost of doing business is extremely high. So listen, what we're going to do is that we're going to sell all the assets that we have in Nigeria, and we're going to another country. And that's what's happening. And at the same time, listen, the naira is falling. The last year, naira, like 2023, naira was down by 50%. When you look at the graph, okay, naira and against the dollar is falling by leaps and bounds, very drastically falling, right? With some of the condition of these loans from the IMF is it forces countries to devalue on their currency, so that when you pay interest, it is more. So that when you pay interest, it is more. The interest is more than the principal. Okay, you understand me? Listen. This loan, if you do 4 year, let's take for example, the naira is falling 50% every single year, 50% every single year. That's an example. How much money do you think the Nigerian government, the Nigerian population, the Nigerian youth, the Nigerian boys and girls, our African brothers will pay to IMF in terms of interest? Let's do another math. Let's say it's falling 50%, or let's say the naira falls by 10%. I've done calculation on 10%, but not 50%. If it falls 10%, naira has to pay $7.1 billion. $7.1 billion at a loan they took 2.5. They're paying $7.1 billion. Excuse me. 7.1. Let's say if it falls by 20%, the naira falls 20%, the value of naira, they have to pay $14.1 billion. Man, that's crazy. I mean, that is economic hitman, right? And I wish that the president in Noble will hire very incredible economic advisors and keep away IMF and keep away IMF because of the condition it met. Like they're looking 20 years, they're looking 40 years, they will say, hey, listen, you will be a slave. You'll be a slave between now and 40 years. You have $113 billion in debt service, and we'll still drown you more and more in debt. We make sure that you devalue your currency so that we can pay, so that you can pay interest, right? Very high. And number two, we make sure that we give Western banks a chance and opportunity to participate, to compete in Nigerian market, in the fintech space. That's what they're doing, right? So Nigeria is looking to pay 40 billion between now and 40 years to come. They will pay 40 billion in interest. 2.5 billion dollars literally turned $40 billion to IMF. At 1 year, they will pay $1 billion in interest. 1%. Calculation of the math. Why? Because they know that they will force the currency, the naira, to go down. And when the naira go down, the interest go high. Because the dollar and the naira, the dollar is high, and you need to pay these loans in US dollars. You need to pay these loans back in US dollars. All loan is dollar denominated, right? All loans from IMF, it is dollar denominated. You need to pay all back these loans in dollar denominated. $2.5 billion literally turn into $40 billion. Every single year, Nigeria is looking to pay $1 billion every single year. $1 billion to IMF. Between now and 40 years, it's $1 billion every single year. My God. Come on, that's a lot of money. I mean, that money would have been employed a lot of people. Would have put Nigeria, like Nigeria is known to have oil. Why is not Nigeria like Dubai, like UAE, right? Why is not IMF going to Dubai and forcing them to take this crazy, insidious, stupid debt in terms of economic recovery, stabilization, right? And they drown more in debt because IMF is in the business of making its member states to be their current clients over and over again, and to be their repeated clients over and over again, to be their repeated client over and over and over again. So with that being said, ladies and gentlemen, my Nigerian friends, listen, you need to rise up and do not stop the revolution. Kenyan boys and girls on the Gen Z, please don't stop the revolution. Listen, with that being said, I wish you peace, I wish you luck, I wish you prosperity, I wish you good health, I wish you wealth, I wish you money, and I wish all the great things that you desire. Much love. Peace out.